This is the StreetBeat.com CEO interview series, bringing you information straight from the top. And now your host, Steve Cannavale.
Steve Cannavale here in the CEO interview series, and today we're with Mesa Energy Holdings and CEO Randy Griffin. Randy, thanks so much for being with us.
My pleasure.
Let's talk about the first quarter. The first quarter looks to be a very positive step for the company, and can you elaborate on the results?
Okay, we both our production and our total revenue for the first quarter were up over the fourth quarter of 2011, so we were very happy about that. We did have a couple of expense items that came in the first quarter. We've had to do a lot of work in these fields since we took them over from the standpoint of rehab and deferred maintenance and so forth, and so that's continued to be pretty expensive. And we also have had a lot of accounting and audit costs related to the acquisition and the year-end audit and so forth, but that's all behind us now. We ended the quarter with cash reserves plus our borrowing base availability of over $7 million, which puts us in a position to move ahead with our business plan, and so we feel pretty good about the balance of 2012.
That was the quarter. Let's talk about the future. Can you give us an idea of what's in store for later in the year?
Well, we expect to continue our efforts to improve operating efficiencies in all of our South Louisiana fields. We've permitted and are in the process of converting one of our well bores to a disposal well at Lake Hermitage, which will reduce expenses quite a bit. We tried that once a couple of months ago, and it didn't work out, but we picked another well bore, and so we feel good about getting that done over the next month or so. We're also replacing some flow lines and continue to do other things to optimize the efficiency of our production in those fields. We're also working to complete our geological evaluation of the Valentine field, which we've been working on now for several months. Another company has recently drilled a well off the flank of that field that was very successful, and so we think once we get through with our evaluation, we'll probably have additional opportunities over there. We've got a handful of additional recompletions planned for the Lake Hermitage field, and we expect to drill the first of our approved undeveloped locations in that field later this year.
A couple of thoughts on the big picture and the long-term growth strategy for the company.
We really have four paths that we're working on now. One is to continue to enhance the production and efficiencies in our current fields. The second is to get underway with the drilling of our approved undeveloped locations at Lake Hermitage, and hopefully once we've identified them in the Valentine field. We also are continuing with our leasing activities in the Mississippi and Limestone in Oklahoma. We feel like that's a great diversification for us, and so we will continue to do that and would hope that we might be able to drill a well up there prior to the end of the year. We're also looking at a number of additional acquisitions in South Louisiana, and maybe our a little bit longer term goal here is to be in a position either late this year or early next year to step up to the Amex.
I'm sure many are wondering what's going on with your New York Java Field property. Can you tell us what's going on there and elaborate some?
We still own the property. I believe in it as much as I ever did. We did some early testing there, and those results were very good. But we reached a point where we felt like that horizontal drilling was the way to go up there, and unfortunately, the state of New York and their evaluation of their permitting rules and their position related to fracking has continued to string out over what's now a significant period of time, and that's a shame. I think the state is really missing out on an opportunity there, and for a lot of tax revenue and economic development, both on a state and a local level. But it's their state, and I guess they can do business as they see fit. But the property's not going anywhere. It's held by production, and so we've put it on the shelf, and we continue to monitor the activities up there, and are hopeful that they will be able to arrive at some conclusions that will allow the industry to move ahead in New York, and then we'll go back and revisit the property and get back in gear up there.
As a former hedge fund manager, portfolio manager, I look at the stock and I go, wait, the guys have a proven PV10. It looks like a valuation to me is about 105, 110 million, with maybe 20 to 25 million to get investment to get it out of the ground. Your current market cap is about 15 million. You got $3.5 million, I think, in cash. Is that right?
Correct.
And I mean, I look at it as a portfolio manager, and I go, well, wait a minute. Even if this thing, doubles or triples in market cap, you're still not banging up against the top of what the true valuation is. In your mind, have you seen this in other companies? And I know you're the CEO, but talk about, from an investor standpoint, why they should pay attention to those kind of details.
I suppose every CEO thinks his stock is undervalued. So in my case, obviously, I agree with that. I think that, it's taken a while for us to get on the radar screen. We did a pretty dramatic transition when we made the acquisition of TNR back last year. And it took several months for the numbers to get fully integrated into our financials so that those who were following that information could see fully the impact of the acquisition. And then, we had some convertible debt that was there from 2-3 years ago, and those guys converted most of their shares in the first quarter and have been liquidating their position. Frankly, I have a hard time understanding that, but I also know that the time window that those small institutional types tend to use is short, and from their point of view, they exited with a good profit, but that selling pressure, I think, had a negative impact on the stock, but that's past us now, and so I really expect over the next few months for that to turn around and a lot of our value to really be realized.
Again, putting back my portfolio manager hat on, I look and I say, if I owned this company and they were in my portfolio, and I'd kind of say, okay, Randy, when are you, what are your plans to go to the Amex? Do you need some money to do that? Have you thought about a 10-for-1 reverse? Because you're a real company, with real revenues and real potential to kind of clean up the old. How do you respond to that?
We clearly have thought about that. I'm hesitant to do that without it being done in conjunction with a bigger plan. And so my hope is that we can reach a critical mass here very soon where we can put a much bigger finance deal in place, and we can accelerate our drilling and acquisition program, and in conjunction with those things, then do the split and step up to the Amex. I've seen too many times where companies do splits without any accompanying activity, and that doesn't seem to work very well. So I guess I would say that that's very much on our mind, and I feel like that's a path that we will follow, but we will follow it when the time's right and not before.
Randy, you're moving out of Louisiana into Oklahoma. Why is that exciting, and why should investors take note of that?
Well, we've talked about New York. A lot of the reason that we bought that property in the first place was we wanted to establish an expandable, repeatable drilling program. So far, that hasn't worked out because of the delays up there that we've already talked about. Everything in Louisiana, of course, it's a great place to do business, and our production and our properties down there we're really excited about, and the additional drilling that we have lined up there we're excited about. But we really feel like that over the long term, to really grow the company, we need some diversification into other areas. And the Mississippian lime in Oklahoma is something that's gotten to be a pretty exciting play, and it's close to home. And Oklahoma is a great place to do business from an oil and gas point of view. And so the opportunity to acquire acreage up there and establish a repeatable drilling program is something that we are really excited about and think we need to do. And so we're early in that process, but we've acquired some good property and continue to acquire more. And so we're looking forward to really talking about that more in the future and working hard on that project. 2,000
acres there. Do you see that 4,000 sometime soon?
Yeah, I think so. We've got acreage that we have acquired and have in our portfolio, and then the other thing that we're trying to do is we're talking to a number of companies that have acreage that's held by production of older wells, and to the extent that we can make deals on that, then that conserves our cash. And personally, I'm all about cash conservation. I know that the cash is as important an aspect in running a business as profit is, and so to the extent we can spread our cash and control a bigger acreage position, well, that puts us in a position to I think really expand our drilling program more rapidly.
For the shareholders, owning land and the pursuit of that land. I know you've had some offers from people around you to come and buy your property. Can you give us a little on that?
Well, it's an active area up there. We have had some interest in some properties that we have, but we're about growing the company. We don't feel like you can do that selling properties that you have. But we're in an active market up there, and also in South Louisiana. There are a lot of opportunities for acquisitions that are around us that we can fold into what we're doing there, that the incremental cost of adding them to the core area that we already have is not very high. So we're constantly on the lookout for opportunities in that regard.
Some of the shorts who are, or not shorts, or people who are thinking about getting out of the stock here, would look at it and maybe say, hey, he didn't have a great quarter. Production wasn't what they expected. They had a little bit of a fumble. What do you say to those shorts about, getting out of their stock here, and why shouldn't they do that?
I think you have to be very careful about looking at pure fundamentals with Mesa, particularly with the stock price at this level. We're about growth. We've established what I think is an extraordinary foundation, not only financially, but with people. So, we're poised to be able to do a lot bigger and better things. And so I think the growth side of the equation is what needs the focus, maybe more so than the fundamentals. That's not to say I think there's anything wrong with the fundamentals. I think they're good. But that's not all the story with Mesa, particularly with the stock price at this level. So I think that's where the opportunity is.
He is Randy Griffin, CEO at Mesa Energy Holdings, symbol MSEH on the bulletin board. Randy, thank you so much for being with us, and we look forward to covering you in the upcoming quarters.
I appreciate you having me today.
This is Steve Cannibal. We're here bringing you information on small and micro cap you can't get anywhere else via the StreetBeat.com and the CEO interview series.
Let the Street Beat CEO interview series help you. The CEO interview series provides you a vehicle to give potential investors insightful information and a better understanding into the inner works of a company's direction, straight from the top. Investors need as much knowledge as they can obtain these days, so let the CEO interview series provide this service for you. Always stay a beat ahead and sign up at thestreetbeat.com today.
Stay a beat ahead and get market news you can't get anywhere else by signing up for the StreetBeat.com newsletter on our website. The Trader's Corner is a StreetBeat.com production. Thanks for listening.
The StreetBeat.com is a publisher of news and opinions and not a securities dealer or broker or an investment advisor. For a full disclaimer, please see our website.